Hello, are you feeling poorer than you did 12 months ago? I think I might have the answer. If you watch my content over any period of time, you'll know how skeptical I am about government inflation figures. They have been manipulated within an inch of their life. And if we still use the measures today that we used back in the 1980s, then you'd really know what inflation is all about. So what I've been doing is delving into the official figures on the website of the Office for National Statistics. And in a moment, I'm going to share with you exactly why you are feeling poorer than you did 12 months ago, and at least 6 ways in which I think you're going to be even more poor by the end of 2022. This material carries a severe official health warning. There are going to be some statistics in this broadcast that some people may find offensive. And there may even be the teeniest little bit of criticism of our great leaders. So if that's likely to offend you, please look away now. But first, a special message. This video is dedicated to the truckers of Canada who have shown the world how to deal with authoritarian tyrants who try and hijack your country. Now, in the comments section, I'm going to give you a link to some footage of what Ottawa looked like last weekend. And I take my hat off to those guys. And I'm pleased to see that truckers in America and Australia now look like they're following suit. And so if you believe in freedom, please hit the like button and share this video with everybody you know so we can get a bit of momentum around this fight back for freedom. Okay, so I think there are at least 6 ways in which you're going to feel poorer by the end of 2022. The first one, of course, is rising prices and inflation. I mean, who could have guessed that shutting down the world's economy, then printing gazillions of pounds and dollars of money, and then reopening it with all kinds of supply chain issues, so you've got more money than ever, chasing fewer goods than ever. Who'd have thought that that might cause inflation and rising prices? A 10-year-old? Yes, that's where we are. I'll show you exactly how far that's gone in a few minutes, but believe me, it's not pretty, and it's certainly not going to get prettier anytime soon. So that's the first one. Next, of course, comes rising taxes. And what would be the ideal time to increase taxes further for the British population? Yes, when everything else is about to go through the roof, like energy bills and food prices and petrol prices, let's stick another 1.25% onto national insurance, and let's raise 12 billion, even though we've actually got about an extra 80 billion we weren't planning for in the coffers already. Let's just stick it to these people to show that we mean business. So as we record this on the 1st of February, Rishi and Boris are sticking to their guns. This is going ahead. It's going to cost more for families. It's going to cost more for small businesses that are already on the ropes after banana syndrome. So thanks, guys. That's really great thinking. I love this joined up stuff. You know, let's just focus on the parties, shall we, instead of all this serious stuff like the economy. Next, well, we are in the hands for the third one of the Bank of England, rising interest rates. If you look at what the Fed's doing, they've already tapered their bond buying. They're now going to actually not only raise interest rates, but they're also going to do some quantitative tightening, which in other words is reducing their balance sheet and selling some of the stuff they've been buying. And what's that going to do to the economy? You see, you've got to remember now, we've got a battle going on here between the need to reserve asset prices, which of course helps the rich, and the need to be seen to fight inflation, which helps the masses. And when you've got a big election year in America, what do you think Joe Biden's saying on the hotline to Jerome Powell? It's going to be raise interest rates, show that I'm doing something about addressing the mess that you and I have created, Jerome. Well, let's see what happens. But it looks like even in the UK, we're also going to see rising interest rates and all the knock-on effects of that. Higher mortgages, higher car loan costs, but of course, higher repayments on government bonds. And guess who picks up the tab for that? Oh, that'll be you and me, the taxpayer. What we'll also see from rising interest rates, and it's also started just in, markets kind of predict the future. They know this is coming. So stock markets are already falling into correction and even bear market territory based on the anticipation of these coming interest rate rises, which will particularly hurt the kind of growth stocks, the FANGs, the famous ones that have been shooting for the moon in the last 10 years. We're probably going to see further corrections there. And obviously, the biggest victim of all this, presumably, if there's any rationality in the markets, which sometimes there isn't, would be bond prices. Because when you raise interest rates, that means new bonds get issued at a higher rate. The old bonds that were issued at the lower rate, because they're paying a fixed amount of income, their prices have to fall to match the level at which you can get from the new bonds. So any rise in interest rates must see a fall in bond prices. So are you invested in bonds? We've talked about this before. Now would be a good time to check because those things are going down. And the other thing that I think we'll see from all this will be at least stagnant and possibly falling property prices. If you saw my video the other week about the property market, most people seem to think it's going to either stagnate and do nothing, or it's going to fall between 5 and 10% this year. So there's another way in which your wealth effect, if you like, may well decline this year. So there's 6 ways I've mentioned there. Obviously, if you're a business owner, you're going to take some other hits as well. So, in that sense, things are not looking too promising. But let me share this with you. And don't forget to hit that like button, by the way. As of December 2021, the official government rate of inflation stands at 4.8%. Now, here's what that figure doesn't tell you. Remember how I said it was manipulated? Well, they have a basket of goods that make up the official figure. So when things start looking a bit too high, they get removed and replaced with something else in that basket to try and keep it as low as possible. So when you see 4.8 in Britain and 7.1 in America, that's already the result of massive manipulation to try and make that number look as good as possible. Let's talk about some of the things that don't make it into the basket that probably do actually have to be bought by you and me with whatever meager money we have left after the government's taken all their tax from it. So in the year to December 2021, transport costs went up 12.1%. So there's 3 times nearly the rate of inflation for you. Cooking oil, which I guess we all use, went up 13.1%. How about housing repair? You tried doing some work on your house recently? Have you seen the cost of the materials for that? And that's assuming you can get anyone to come and do the work. The official figure for material to maintain or repair your home is that it went up 13.9% in 2021. Furniture, if you were furnishing your house or an investment property, that went up 12% last year. Again, 3 times the official figures. Electrical appliances for the house, 9.1%. Again, way above, more than twice the official figures. Now, obviously, energy costs, you're not going to be massively surprised when I tell you that energy costs have gone up significantly. But as of last year, electricity was up 18.8% across the year. Gas, of course, the big controversy. Hi, Vladimir. I hope you're watching. How you doing, mate? Look a bit busy over there in Ukraine. Gas was up 28.1% last year. Liquid fuels were up 52.2%. And I remind you, I'm not making this stuff up. These are all the official government figures. Look them up yourself on the ONS website. Second-hand cars went up 28.6%. Now, was that the chip shortage, meaning you couldn't buy a new one? Or was it just, again, all this money sloshing around, people think, I know what I'll do. I'm under house arrest. What should I do? Oh, I'll go to one of those new online car places, the Cinchers and what's the other one called? I've seen the trucks going around. I'll buy myself a second-hand car. 28.6%. Even motorbikes went up 12%. And then, of course, once you've bought your second-hand car, you have to put that petrol-y stuff in it, don't you? Unless it was an EV, of course. But petrol went up 26.8% last year. Can you start to see how these figures of 4.8% just seem so bizarre? I mean, which of us did not have to put petrol in our car in 2021, and the prices are up nearly 30%. Now, if you were brave enough, and I confess I was one of these people, or mad enough to face all the crap beforehand, all the tests, all the locator forms, and you actually went to the airport to get on an airplane and go somewhere, your air travel went up by 28.8% last year. And when you got there, your accommodation costs went up 15.5%. And that was the same in the UK if you decided to take the staycation route, because of course everyone hiked up their prices because there was suddenly more demand. So any kind of travel, home or abroad, massively increased in cost last year. Even if you wanted to stay at home and work on the allotment, gardening tools and equipment and plants and flowers went up a mere 8%, nearly double the official rate. So all of these are real world expenses: housing, energy, cars, fuel, and the official figure is 4.8%. That doesn't quite seem to tally, does it? I mean, maths was never my strong point, but maybe if you'd stayed in your living room, wrapped in a blanket with no heating on, you didn't own a car, you didn't travel anywhere, maybe your cost of living only went up by 4.8%. If you lived anything vaguely like a normal life, and that's in a world obviously of over-the-top restrictions thanks to banana syndrome, your costs probably went up by 15 to 20% on average in 2021, and there's every chance they're going to do the same again this year. Of course, wages did go up, but only by around the official figures of 4 to 5%, and that was skewed towards the lower paid. So the higher paid you were, the lower your income actually rose. And so, when you've got costs in the real world going up by 20% and you're only getting 0 to 4% increase, chances are you're going to feel a bit poorer. There's no sign yet that inflation's peaked. So I think we can expect another year like that in 2022, especially, of course, from energy bills, which are probably going to go up 50% for most households. Stocks and bond markets have been manipulated by central banks since at least 2008, but they've been manipulated upwards through lots of money printing. What I think we're going to see in 2022 is the markets manipulated downwards in order to fight inflation, or to be seen, and for politicians who give the instructions to the central, I'm sorry, they're independent, aren't they? I keep forgetting that. Can you book me on that political correctness reprogramming course? I'm sorry. Yes, of course, the governments and the central banks are independent. Sorry, I just couldn't quite read my instructions there. Yes, so I think we'll see some manipulation of markets downwards. The Fed has brought forward rate rises to March, and they're now talking about 3 or 4 rises that could be anything up to 0.5% each time, 500 basis points. So that's pretty substantial. So obviously that's already hammering growth stocks. It's taken longer to hit the bond markets, but I think we're starting to see the bonds reacting to this now. So yeah, what we're also going to see is higher interest rates and tougher lending criteria. It's hardly going to give a boost to the housing market, is it? It's at least going to flatten it, probably coming down, as I say, 5 to 10% seems to be the general consensus on that. Gold seems to be comatose at the moment. This should be perfect for gold. It should be shooting for the stars. And, the conspiracy theorists are saying that even the gold markets are being manipulated. And who knows? I mean, it's so hard to discern truth from fiction these days. These days, you'll be telling me the BBC News can be trusted in a minute, but sorry. Yeah, no, I'll get booked onto the course. Believe me, I will, honest. So I think we're going to have a cash in the bank, obviously continuing to lose value as money gets debased through inflation, and not so much money printing this year, but I mean, inflation's going to just hammer the power of any cash you keep on the sidelines, and you should always have cash on the sidelines. There could be some bargains to be had later in the year, but recognize you're paying a price for that. And that price is declining purchasing value over time. So, don't sit on too much cash, because, this is all about trying to build wealth and protect wealth. And, if you think it's smart to sit in cash, your cash is actually going down 10, 15, maybe 20% in real terms over the next 12 months. So, you better have some real bargains to pick up if you're going to justify that. So we've talked about the Boris and Rishi plan, the 12 billion national insurance hike. That's actually going to hit people worst in the middle income region of 30 to 50,000 a year. And I think actually a lot of these events of 2022 will hit the middle class the worst. Now, obviously, I know rising energy and food prices hit the lowest income people the worst. But what I think we're seeing with all of these measures to try and address that inflation is going to hit asset prices, and it's going to be a tax on the higher income as well. So if you own assets or you're in the middle to upper income bracket, I think you will probably suffer the most in 2022. So the Bank of England rate is 0.25% as we record this. The question of the week is, what will the base rate in the UK be by December the 31st? So please put your prediction for the UK Bank of England base rate in the comments below. And if you want to think about actions to take, have a look at the video I recorded, he said, pointing up here, a couple of weeks ago about what I'm doing in 2022. But the point is, you really need to be on top of your financial management in these days of high inflation and volatile markets. So don't panic, but make sure you're well informed, and I'll see you next time.